Hey everybody, it's Pete. Good morning. Thanks so much for joining me today on Stocks for Breakfast. In today's video, we're going to discuss electric vehicle stocks, which electric vehicle stocks I'm looking to buy right now. We're going to start right at the top of the list with XPeng, XPEV. We're going to take a look at NIO, which has kind of been in the middle of nowhere. We're going to jump over to LI, which had some pretty good news recently. And of course, we're going to go back to the OG Tesla and see what kind of price action we have over there. The one thing I do want to point out first, though, is I want to point your attention to a free trading course that I did recently. It's actually on YouTube. There's no cost for it. And I just want to give you the link for it. I want to start out there so I can give you some extra free training because we're getting a lot of really good feedback on this. So I just want to go over here and point you to this course right here, Ultimate Stock Trading Course for Beginners. In the notes below the video, in the description, you'll find a link to that video. If you have some time this weekend, I'd suggest you watch it. And I just want to give you the table of contents because right now I'm getting a lot of feedback from traders who are struggling, traders who are having a hard time with the back and forth of the market, where a lot of new traders were buying stocks with absolute clarity because we were pretty much just going up every day. And we're not seeing that now. So it's really important that you have some sort of structure to what you're looking at. And this is definitely something I'd love for you to write down, is that you need to have a strategy so you understand when not to trade. As much as it's important to understand that you want to make money and understand that bigger and bigger profits in the, when you buy stocks, that's your goal. It's just as important to understand how to not lose money. And the only way to understand how to do that is to understand what great looks like and then everything away from great. So I just want to show you really quickly what the table of contents is, just to kind of get you a little bit excited about there. We talk about why stocks go up and down, probabilities, which actually let me zoom that in a little bit so it's easier to see. But I think this is probably the biggest part that I want to get across, because we're going to talk about that today, which is tape reading. We also get a lot of questions about scanning and that kind of stuff. So if you happen to have some time this weekend, this video it's free. Obviously, it's on YouTube, but it's about 30 minutes, and I think it's definitely worth your time if you find you're kind of getting hit back and forth right now, and the market is kind of bouncing you around like a pinball, which is very understandable, quite honestly. I think we've been very fortunate to have the vicious bullish rally that we've had for the last 18 months. And that was amazing. We kept saying it was a glorious time to be a stock trader. Buying stocks was, dare I say this and keep this in context, it was relatively easy to be a stock picker during that period of time. And we're starting to see that we're going to end up getting back into normal price action. And we got a good question about that. And exactly what does that mean, normal price action? And I'll tell you as soon as I get back. I just had to put up this notice. Okay, so just a quick reminder, everything we do here on these videos is for educational purposes. It's up to you to make the final decision. It's my mission to help you make better decisions. So I just want to talk about what it means to be trading a little bit more of a back and forth market. And essentially what we're going to be training new people in our community to do is understanding how and when to hedge positions and how and when to adjust your profit targets based on the scenario. And just as importantly, how and when to adjust your position sizing. So if you remember yesterday, and if you didn't happen to catch yesterday's video, we gave you a link to a coaching call that we did recently, which was almost 2 hours. And you could see the entire agenda of everything on that coaching call. It was a lot of stuff. But again, the biggest thing, it was in yesterday's video, actually. I want to inspire you to ask yourself, because if you're on this call right now, first I want to say thank you. 7:30 in the morning. I know I say this every day, but it really shows how badly you want to succeed. If you are working your tail off and not getting the results you want, here's the number one thing to do. You have to start asking yourself what definitely doesn't work. There's no other way to put it, quite honestly. There's really no other way to put it, because whether you get the training with me and become one of my coaching students, whether you do it on YouTube, it doesn't matter. What matters though is, are you paying attention to results? Because I say it all the time. It's in all of the training that I have. The single biggest mistake that I made the first probably 18 months of trading, and remember back then there was no mentoring or anything along those lines. The biggest mistake is I did not pay attention to what was working and what was not working. So I'm trying to give you my experience to get successful quicker. And I want you to understand this. And I'm going to tell you this in a way that I hope really breaks through to you right now. All right. Let's just say a 12-month period. The first 12 months I was trading. Each one of those 12 months, I was trying something new. I would try this strategy, that strategy. I had literally everything on my screen. And I didn't give each strategy enough time to prove it worked or prove that I could actually follow it. So what I ended up having was 12 one-month experiences instead of 12 months experience. If I would have been paying attention sooner and that feedback loop would have helped me get, okay, that doesn't work, that does work, that doesn't work, that does work, you start to become successful so much quicker. So the biggest challenge that I'm willing to bet that most of you have right now, if you have this like burn in your gut that you know that you could be further along and you know inside of you that there's more you can accomplish, it's critical that you pay attention to what's not working. And you know, we have all the books. We've talked about all the books. And Jesse Livermore, the single biggest thing he talked about is making a big list of what doesn't work. That's your number one goal, because the sooner you avoid and learn from what doesn't work, then you could spend all of your time on understanding how to make more in your winning trades. So I can't stress this strongly enough. You're here, 7:30 in the morning. And again, maybe you're watching a replay of this. Thank you if you are. But you're here, and that show, you don't have to show it to me. You're showing it to yourself how badly you want success. There's a lot of people sleeping right now. There's a lot of people probably watching, cartoons or something now at 7:30 in the morning. If you have that burning desire, it's up to you to decide what doesn't work. Like for me with diet, like I love to eat. That's why I'm not losing weight. But in trading, we have to do the same thing, is we have to pay attention to, okay, maybe buying stocks that are going straight down doesn't work. And tying up capital doesn't work. Maybe buying stocks that are stuck in a 3-month trading range, that's a waste of time. You have to make that list and stay away from that list. I'm also going to give you another one that was a big part of our conversation in our coaching call on Monday night, which was somebody who was talking about they have a hard time taking losses. And that's an ego thing, quite honestly. But more importantly is that if you can't take losses, if you can't respect risk, especially if you started trading in the last 18 months where the market has pretty much done nothing but go up, you're going to be in a world of hurt. I'm going to tell you that right now, because you've been very fortunate that the market would go up, have a blip for 2 days, and then rip for the next 3 weeks again. I'm telling you, there's going to be a moment where the market's going to roll over. You're going to be like, okay, I'll just add here. I'll just give it a little bit more room. And then and the possibility of it going down for another month and wiping your account out. Throw your ego out the window and accept the dollar amount of the loss. Like we had a trade yesterday in RBLX. And we didn't get involved on the open because the previous risk was too much. So we waited a little bit later in the day, put the swing trade on with a small initial position, took off in our favor, probably, I think it was $3 in our favor right away, and then got crushed. And we got stopped out on the same day that we put the trade on. But here's the thing. You just get out like that. You have to accept the dollar amount. And then you just say to yourself, remember, you want to write it down. Where am I going to make that money back? That's how professional traders think. So if you're watching these videos every day, hopefully you understand that what I'm trying to do is I'm trying to teach you how to think like a professional trader, which is so much more than just give me the perfect bull flag, or, am I using a 10-period moving average versus a 12-period moving average? That stuff's not where success comes from. That stuff is the easy part. The hard part is up here, and understanding how to manage yourself. Manage the downside, and then learn how to make the upside. Hold those winning trades. What is the process of holding those winning trades? But you can't get to the second part if you're blowing your account up over here, because that means you're not paying attention to what's not working. All right. So again, I posted the link to this video below. You definitely want to get in there and take a look at it. You can see how long it is. This is the name of the video, the Ultimate Stock Trading Course for Beginners. So if you have some time, get in there and take a look at that. All right. So obviously today, this is the big thing we want to talk about. This uncertainty because of this new situation is wreaking havoc on the market. There's really no other way to put it. And we can see that here when we're breaking down our sector rotation. You could say that technology has been the top sector for the week, but it's just the least negative, which really means that there's not that much relative strength there. So that really comes down to this. How do we trade if there's no relative strength? How do we trade when there is not super obvious order flow in a group of stocks and allowing us to get in there and say, yes, this is where smart money is allocating their capital. So we're just going to piggyback on top of what they're doing already, which, by the way, that's the easiest path to trading, which hopefully you know that by now if you've been a member of our channel here. So anyway, that means that we need to do two things. We need to spend more time game planning, which is a big deal. That's actually a big revelation, quite honestly, for a lot of people that just joined the boot camp this week, which is the amount of time that goes into game planning. So I'm going to give you a bunch of ideas today. We're going to talk about the electric vehicle stocks. NIO reported some news on sales. XPEV broke out yesterday. So we're going to outline some scenarios of what we need to see. But here's the biggest thing that I want to make sure that I call your attention to, which is all week. Again, it's only Wednesday, but all week we've been discussing the market and tape reading. Now, what's going on in the bigger picture of the market right now is that the uptrend is broken right now. All right. If the uptrend is broken right now, that means that we really need to dial it in and say, where can we find the minimum criteria for us to accept risk? That's what we're looking at right now, because the bigger picture in most of these things are a lot less than obvious. Although there is one pocket of opportunity I want to talk about there, and you should be able to spot it right away. Look at over here. That one, actually, let me click on that. I'll probably open it up a little bit more clear. That one pocket of opportunity right there, Apple and Tesla and Pfizer. We're actually going to take a look at Pfizer here as well today too. So here's a key, and this is something you want to write down, and then we'll hop right over into the electric vehicle stocks. I mentioned this briefly yesterday, but I want to make sure that it's a part of your daily game plan, a part of your daily routine. If on days that the market is really weak, especially on days where the market closes on the lows. So now I'm giving you structure. Remember, everything we do has to have a structure behind it so it's repeatable. On days like yesterday, where the market closed on its lows, first we're going to talk about this for the market, and then we're going to talk about this for sectors. Your first scan, your most obvious scan, the scan that you need to turn to every day is which stocks closed positive from the open yesterday, and which stocks, if you want to take that a step further, because remember, everything we do is stacking the order flow, which stocks also closed net positive. So we're stacking it in two pieces there, net positive and positive from the open when the market got hammered. Those stocks showed relative strength. Those stocks showed buying pressure while the market was getting hit. So Apple, Pfizer, and Tesla are the three that stand out the most. Probably Apple, depending on where you were reading yesterday. Apple is now considered a safe haven because of their cash flows and the fact that there's no likelihood of them going bankrupt if interest rates start to rise, although all tech stocks are going to get hit at that point. So keep an eye on those stocks right now heading into the day. So moseying our way over into electric vehicle stocks. You can see the list here. We actually didn't even mention Rivian before. We did earlier actually last week, we did a breakdown on it, but now we're going to do a breakdown on all of them. LI actually showed some good relative strength as well. XPEV has been the one. So we're going to do a little bit of a breakdown just to give some levels. And we're actually going to work our way over on the weekly chart, because this is really where the tape is a little bit more obvious for many people who watch these videos, which is basically swing traders. Okay. So we know that the next level here in XPEV is all the way up here. This is where sellers came in and did something significant. So remember what we keep talking about a lot recently, which is two-step trades. Two-step trades are where you definitely want to be long a stock. That's the first step. The second step is how close are we to the optimal entry based on what the stock normally does, and how much room does the stock have to go. So there's actually three different steps. Where's the optimal entry? How much is it already gone? And how much room does the stock have to go? In this case here, the next level of significant reference point where sellers stepped in is 58. So what I'm looking to do is I am actually looking to bid for this stock in two pieces. The first piece on a higher open today, the second piece after it breaks 60. So we get a lot of questions, and I'm actually seeing them in the chat right now on where to end up getting long. Okay, very, very important. All right, so XPEV is the first one. NEO, if you didn't see, had news yesterday. 2021 delivery update. Now, here's the big thing with NEO. Pretty much every time NEO has these announcements, the stock rallies on the open and then sells off. We need to see if NEO can get above 43, 44 right now, because that is the level where sellers have come in, smashed it down, come in, smashed it down. But I'm giving you a heads up because we've traded NEO very actively this year, and every single time new news has come out on NEO, it gets sold. So what we really need to see is, does NEO hold the bid after today's news? You can see it's already up 3.4%, $1.33. So again, I'm seeing a lot of questions in here about exactly when to get in. I'm giving you the step prior to getting in, which is we need to see the stock hold the bid, which means I am not buying NEO as soon as it opens today, because I need for NEO to hold that bid in order for me to feel confident that finally these new deliveries are going to actually change the cash flows for the company, because they haven't. Every single time. I don't know if everybody remembers last year, NEO Day, where NEO Day, everybody couldn't wait for NEO Day on a Saturday. The stock exploded and then sold off for the next 3 months. So you need to understand when the news comes out and what price action is doing prior to that news. So obviously now LI is another one that we've been talking about. LI is actually resting right at 36 to 38. And hang on one second, right at 36 to 38. So I do like the breakout here. So again, I am not trading with you when the market opens. As we said at the beginning of this video, it's up to you to make that final decision of when to get in and buy the stocks. I am looking to buy LI today and initiate my first piece above 37, which it actually looks like that's where it's sitting right now. Okay, so moving on over into some other electric vehicle stocks. We have NEO, XPEV. Obviously, we're going to talk about Tesla. Okay, Tesla is now forming what is known as a distribution, actually, where it's actually rallying and pushing back and forth and not as obvious, and it's doing it on heavier volume. So I right now I'm not looking to do anything in Tesla until it gets through 1200. Okay, 1200 is the level I'm looking for in Tesla. So now we want to mosey on over into LCID. LCID above 56 is the level. Again, I see we're getting a lot of questions here about where and when. Above 56 is the level that I'm looking to bid for LCID. And of course, the last one, Rivian, which is still pretty new. And I'm getting a lot of questions about what do I think long-term about Rivian. Look, we spoke about Rivian when it first came out, that it has a very similar model to Microsoft, where they are literally building the business from the ground up, where they're allowing other people to put their cars on their chassis, which should open up a massive amount of other opportunities for them. As of right now, I don't see that much to do. I don't see any institutional demand. I don't see any institutional volume. As a matter of fact, you can see from day to day, we're seeing nothing but melted candles, and it's trading in the lower 1/3 of what is now the recent price history. So I don't have a long-term opinion on Rivian right now. However, one of the things that we do talk about every day is, even if some of these stocks are not obvious on longer-term order flow, it is very common for us to trade them as day trades because they have liquidity and because they have volatility. So we're going to work on over to the other area that a lot of people are asking about, which is the charging station stocks. We were joking around about these yesterday, that after being on fire for about 4 or 5 weeks, now they're kind of stuck and they really haven't done anything. So I don't have any trades here, but I do want to point out the list so that you can actually make a list for yourself if and when they start to take off again. It's up to us to have that bigger industry group to know that where the money is flowing in. And I think probably the biggest example that we've had of that in the last year and a half is the solar stocks. When the solar stocks are trading well and that entire group lights up green, they're really, really easy to trade because money is flowing in there and it's just kind of staying there. So ChargePoint, BLNK, and EVGO are the top three that have been on my list to be watching. I want to make a kind of a right-hand turn and go over into something that I noticed yesterday. We were talking about the lockup period and whatnot. A lot of people keep asking about Hood and whether or not Hood is tradable, for argument's sake. I have not found a reason to be long Hood at all. I'm not short selling it. I'm doing nothing in it right now. Really, it doesn't have the volatility I'd want on a day trading perspective. However, a lot of what we do talk about and reading the tape, something changed yesterday. Something changed the last couple of days. Volume has started to increase dramatically on Hood. Now, the main question I get about situations like that, when I'll call it out, we get a lot of people in the community say, does that mean we buy it now? No, that means something changed. It's at new lows. Volume is expanding. Now, the next thing we need to pay attention is with that increase in volume, does the stock go sideways or does the stock go down? The longer it goes sideways on heavier volume, the more interesting Hood is going to be. I prefer actually one giant red candle to the downside that stops and then goes sideways for a little bit. But if we continue to get this heavy volume pause, the odds of that being the bottom are pretty good. And then I will start to look for an opportunity to buy it where I need to see it manifest a little bit more than just not going down anymore. Actually, now you need to see them start to step up and start paying higher prices. And that demand will then have me start to build a position over there as well. All right. We also mentioned Apple here before. And when to get long. Look, the stock has already, let me actually go out to the weekly chart, probably a little bit easier to see. The stock has already now gone $5. Is that a lot for Apple? No, not really. There's still some more room to go in that stock right now. So I still like the stock. However, after yesterday's rally and relative strength, it's $5 beyond the optimal entry, which if you watched yesterday's video and how we started out today talking, that today was still a buying opportunity in Apple, but because it went $5 yesterday, I'm not initiating it with full share size. So remember, we started today talking about adjusting your risk reward, adjusting your position size. That's a situation there where it's still a buying opportunity, but it is not full share size on the initial entry. It's at all-time highs or right in front of all-time highs. Actually, it's going to open at all-time highs now. It's actually a 168 and change, okay? So that's actually what I got right now. I don't know if anybody else, I'm just reading the chats right now. Yeah, Jimmy, yeah, we made it very clear we're not buying our Hood yet. You know, what your opinion is on their business model. I think that's a whole other discussion, actually, where whether or not payment for order flow and that discussion with the SEC headline probably about a month ago, 6 weeks ago, whether or not payment for order flow is going to be around. Obviously, virtually every broker dealer has a payment for order flow business model at some extent. The problem with Robinhood is that that's their entire business model. There's nothing wrong with doing it. It's a question of whether it's a sustainable business model as the only thing that they do. And actually, that was an interesting conversation that we had the other day, too, about the actual fills you get with payment for order flow versus actually sending your orders right to the market with direct access. So it's pretty interesting to see whether or not Robinhood can catch a bid or not. Anytime the SEC actually has a comment about it, you know there's going to be a lot of eyeballs on it. But getting back to what we said before, just so it's super, super clear, I am not saying I'm buying Robinhood now. What I am saying is that the tape has changed, and now it's gone into my rotation to pay attention to see if the week now goes well bid, where if this week does bottom out, does next week have higher highs, higher lows, and close near the highs? If it does, then I'll start to look to build a position, but not until then. Remember, there's a difference between I want to put a trade on now versus something changed and now I'm going to pay attention to it. And if you've been a viewer of our channel for a while, you know that the difference between those two, we talk about a tracking journal and a trading game plan. So when we do our scans and find ideas that go into the trading game plan for today, that's the ideas that are going into our watch list to trade for this week and for today. The tracking journal are stocks that have either alerts that we set or a certain type of price action has changed. And then we look for if something happens, then we start to trade it. So tracking journal is future trades to keep an eye on. Trading game plan is the ideas that we're looking at and trading today. Okay. All right. So what does that mean for today's price action? And how does that, and what are we actually looking for as far as getting involved today? So we've been mentioning it all week. And I just want to make sure I reiterate this, that if you don't have structure, it's going to be very, very difficult. You're going to end up feeling like you're buying the highs and selling the lows all week. And that means you need to have patience, quite honestly. If you don't understand what's going on in the market, if the market is confusing to you right now, you know what you should do? You should do nothing. I know a lot of people don't want to hear that, and that's not the sexiest thing in the world. But if you don't have a clear picture of what the market's doing or have a list of stocks that you have conviction in, you shouldn't trade. It really comes down to, and that's a big part of what we talked about before, that understanding when to trade, what to avoid, and then understanding ultimately how to make more in your winners. That is the process. And I can't tell you how many people have been reaching out recently and they're saying, I'm confused, I don't know what to look at. And I try and help them and they want to continue to do what's not working. I have news for you. You don't have to trade every single day. You have to trade when you feel like you have an edge. So now I want to work my way over into a couple of other ideas that I'm actually looking at today. And I'm just going to give you two. The first one is Unity Software, which you can see it's holding this little bit longer term trend. Pulled back quite a bit on Monday with the rest of the market, but then showed some relative strength yesterday. And you can see this uptrend from bullish order flow from October is still valid. So Unity Software is one today. And Pfizer, as we mentioned before, Pfizer actually showing some good relative strength, holding the breakout level that we were watching from 2 weeks ago. And we're looking for Pfizer to actually have a relatively good day today as well. All right. So what I'm going to do now is actually, that's what I have for today. I actually have a little bit of a smaller list because the tape is not as obvious as it has been. And that's just reality of trading. If it's not super obvious, I'm going to dial back what I'm doing and preserve my capital. That's what real trading is. We'll see. We'll see if we get follow through. We already had that line in the sand. We said that Monday's opening price is going to be the big thing in the market. If we have a good bullish day today in the context of the last couple of days of selling, of course, I'm going to be active, but I'm not going to be in there with as much share size if we don't get follow through, if the tape doesn't look exactly how I want it to be. If you want to last in this business, you have to understand when to push it and when to trade for cash flow. And I'm a little bit more in cash flow mode right now. So I actually have to head on over to our other meeting. We got to get prepared. So if you find this stuff helpful, everybody, definitely do me a favor, click down and smash that like button. Don't forget the free course that I have on YouTube that's in the description below the video. And if you have any questions on that, let me know as well. Have a great day, everybody. I'll speak to you soon.